Why would you want to work for 40 or 50 years when you can just retire in 10 years? Retiring in 10 years sounds like a lot of fun, to be honest. So in this video, what I'm going to do is break down a hypothetical situation where you could actually find yourself retiring in 10 years. Now, everyone's starting point is different, but I'm going to try and cover off as much as I can so I can bring you guys some value. I promise you will walk away with some value in this video. If you're interested, keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, cryptocurrency, and financial freedom. Now, the prospect of retiring in 10 years when most people are going to work till 40 or 50 and still not retire with the comfortable lifestyle that they wish to have is a very exciting prospect. What I want you to think about as you go through this video, because it might be lengthy as I drop down into my whiteboard, is that you need to figure out what retirement looks like for you, as well as having the right strategy. So with that, let's jump in. Now, the whole aim is to retire in 10 years. Now, could some people achieve that in 8 years? Could they achieve it in 15 or 16 years? My main goal here by making these videos on YouTube is that you retire with the choices that you want. You retire early, and that might mean 35 years versus 40 years, but it's still saving you time. So hence why I come out here every single week and bring you guys some value. Now, starting point. This is very important because some people I speak to are in their mid-20s and have parents that are cashed up. Some people I speak to that are in their mid-30s have no money next to their name and are renting. And then there's other people that I'm speaking to that might be in their 60s and looking at having some sort of retirement in whatever shape or form that looks like. So let's use some hypotheticals, and please don't destroy me on all the things I missed out on in this video because it's impossible to play out every single situation. So I'm going to try my best. So again, the starting point, it could be different for everyone. So you could be age 30, you could be 40, you could be 50, or you could have 50K, you could have 100K or 300K. You pretty much get the point. Now let's have a look at some of the financial tools we can use. So these financial vehicles that will ultimately help us get to our goal. Now here I've got financial tools. So we've got property, we've got stocks, we've got crypto, we've got alternative investments. So alternative investments could be trading cards like I invest in, but some people invest in luxury products, art, collectibles, as well as things like wine. The other thing you have is savings, so savings accounts and cash, and then you've also got your retirement fund, which is your super. Now you can have your super managed by someone, or you can go ahead and self-manage that as well. Now the most important thing is that your strategy is key. Having this very clear, having at least an insight as to what this overall picture could look like is very important. Something I focus on in strategy sessions is focusing on exactly that. So if you're interested in that, email me or book a time on the website. Now I want you to focus on being an adaptive investor rather than a traditional investor. Most people will approach this video going, I'm just going to do the stock standard thing that people have done for the last 30 years. It proved out to be pretty good. But the reality is this is no normal market. What we're entering are times that we've never seen before, and that means we need to stay on top of it. If you can't stay on top of it yourself, then I urge you, get the right team around you, otherwise you're going to fail. So most people are going to retire at 65 and it might not even be their ideal life. Now 65, I'm not sure what you're planning to do at that point, but again, your mobility is restricted compared to when you're in your 30s and 40s. So again, yes, you should be focusing on investing, but I definitely advocate for balance and enjoying your lifestyle. Being in your 20s and 30s and not doing anything is pretty boring, to be honest. So for me personally, I built this portfolio and this wealth throughout my 20s while still traveling, while still enjoying my lifestyle. And the reason for that is because I understand the rules of the game. I've gone there back and forth with not just myself, but clients actually going and retiring as well through the buyer's agency. So again, if you need help, please reach out. And most people will start full-time work at 22. So the goal is, how do we go from 40 years through to 10 years? 10 years being the goal, but again, if we end up there in 12 years or 15 years, it doesn't matter. We just need to know the way that we can get there. Personally, I believe one asset class alone will not get you retirement in 10 years. You need the velocity of money concept to work for you, which is basically the more the money moves, the more velocity it creates, which allows you greater returns. That's at least my philosophy all throughout my 20s. So far, it's working out quite well, and it's something I urge you to think about as we go through this. Now, as I mentioned in the start of this video, it's impossible for me to know exactly what your situation is unless you're going to reach out to me. So for this example, I'm going to use my case, what my goals are and how I would go about doing it if I started today. So in my case, I want to build a property portfolio first, then I want to go into alternative investments and crypto. This is exactly how I did it. So again, there might be other ways that people do it. Some people made a lot of money in crypto, now want to bring it across into property. That can also work. But for me, I took down this route. So I'm going to explain how that works. So if I started today in year one, let's say I had $70,000, that's what I would need to go out and buy a property for $350K. That would equal about about a 12% deposit. You go out, you pay your buyer's agency fees if you need that, as well as your stamp duty and all of your other associated costs with purchasing the property. Now, in addition to that, I'm also going to save $40,000 per year from my income. So this allows me to not only just focus on a property, but I'm also building up my emergency fund as well as building up that cash. Now, what I haven't covered here is that I could put the cash into stocks. I could put that cash into a high savings interest account, but I haven't covered any of that. That's something where you can fill in the gaps for yourself as to what you feel comfortable with, because I can't give you financial advice. Remember, I'm some guy on YouTube that wears a black t-shirt. All right, let's continue. Now, in year 2, if we have 7% growth on our property, which is being quite conservative here, we should end up making an equity of about $25,000. In addition to that, we're also saving $40,000. So in year 2, we should have $64,500, means at some point we'll be able to go ahead and purchase our second property. And that would be for another $350,000. We go ahead and then save another $40,000 in year 2. So this $40,000 is from this number, and this $40,000 is coming in year 2. So our entire portfolio here would roughly be worth about $725,000 in property, and then you'll also have some cash on the side. Now, what I've got here is years 3 to 8 are rinse and repeat. It's because it's boring. And you look at this and say, well, in year 1 and year 2, I only purchased 1 property each. Well, again, if you have the cash up front, you could probably purchase 3. And that's what some of the clients have been doing. They've gone ahead, purchased 1, end up with 3 or 4 by the end of the year. But despite this looking like it's slow, and it is, things ramp up very quickly. And it's because of compounding interest. As you have a bigger portfolio, the portfolio grows a lot quicker. You see, for instance, if you have a property worth $300K and it grows by 7%, that's $21,000. So the same amount of growth, but because your portfolio size is larger, you'll be able to make more moves later on. Now, the only thing that I would do differently in this scenario is start focusing on crypto and alternative assets. Now, the sound of that might scare you because you're like, I don't understand crypto, or I don't understand alternative investments. What do I do? We got 24 months to figure it out. Start learning about what these things are, because I regret not learning about these things long before I started actually investing. And by learning about those things with those existing businesses as well as new emerging technology, you could end up finding yourself in a position where a small investment can rally up to be quite big. Again, as you go through all of this, you've got to understand your risk appetite as well as having the right strategy. Now, ideally, I would like to have 6 properties in this example, and that would be worth approximately $3 million. Now, some people might say, well, I can't borrow for that much. Now, you may have to look at your borrowing capacity. You may have to also look at if you can do this yourself or with a partner. But in this case, I'm going to assume that I can do this myself. Now, in this case, if we've purchased well, we could end up with about $50,000 worth of extra positive cash flow. That means I've still got a loan on those properties, but because my rents have increased and my expenses have relatively stayed the same, I'm now earning more money than the expenses that I've got. So I'm positive cash flow, which means after all expenses, I'm still pocketing $50,000 a year. That's about $1,000 a week. And for most people, that might be plenty to live off. However, again, if you're living by yourself, it's a different situation. And if you're renting, it's definitely not going to be enough. Now, while I'd be going ahead and purchasing these properties, I will also be DCing into crypto and alternative investments. Now, when I look at crypto and I look at alternative investments, it's a high risk, high reward play. Just like you could have invested into Google, Netflix, and whatnot back in the day, there was a lot of volatility. With volatility comes opportunity. For someone that's active in this market, like myself, I can go and weather the storm and be interested in knowing when I need to sell, when there's peak FOMO, and when I can accumulate as well as go into crypto. Now, if you are interested in dollar cost averaging, building your portfolio passively, then definitely go check out this video. It's how to get started with Binance Australia. I'll leave a link in the description below so you can get $100 worth of free USD. So if I happen to go ahead and invest about 100K, that would equal anywhere between 500K to $1 million. Again, we're looking at hypothetical numbers, so don't kill me in the comments. But the reality is that if we look back 5 or 10 years ago and see how some of these assets have performed, they've yielded more than 20 or 30x. So 5 to 10x is quite conservative for this approach. Am I saying you're guaranteed any of this? No, definitely not. And that's why you need the right risk appetite, and is why I still build out my portfolio in property. Knowing how big crypto is going to be, how big my alternative investments in Pokemon cards is, I will still focus on property more than anything else because it's proven, it's been around for a shitload of time, and it addresses one key concern, which is shelter. If I can address that, that means I know that my investments are recession proof, especially if I'm buying with the right cash flow positions and I've got the right leverage products like home loan. Now, at this point, I can use the $500,000 or the $1 million to pay down debt, which would mean that that $50,000 a year that I get in positive cash flow would be about $80,000, or I can continue building my property portfolio. For me, the property portfolio is creating cash flow as well as equity. Now, am I interested in retiring in 10 years? No, because I love what I do. I thoroughly enjoy it. So for me, in my head, I zoned out at about 24, which is when I left the corporate world to go ahead and pursue what I really love. It allowed me to have the confidence to go out because my portfolio kept growing in the background, and I was able to grow in equity as well as cash flow with my property portfolio. In 10 years from now, do I want to retire? Well, retirement means something different for everyone. For me, it's having the dream home in the next 10 years, allowing myself to have passive income coming through from my investments, but I still want to do what I love. And that might mean just making more videos on YouTube or whatever the next platform looks like. Now, with this cash flow and equity, I can then go and put more positions into assets like crypto as well as alternative investments. In years 5 to 10, I'm able to then sell some of those for profits, and I can then go ahead and earn about 300K, which is the target for myself. I've worked out backwards to figure out if I can have a house paid off plus 300K worth of income in today's value, I'll be able to maintain the lifestyle I'd ideally like for myself and for my family. Then I would be able to go ahead and buy my dream home as well. As we end this video, we need to know that risk and strategy is the key part in this. If you want help with the strategy, there's a link in the description below to my buyer's agency website where you can book a call, or if there's no times available, you can shoot me an email, which would be in the pinned comment down below. You may have gone through this video and said, well, I can't do X, Y, and Z. I can do X, Y, and Z. I've got more money than I started with than you did. How do I do all this? Again, I was never going to be able to capture everyone's scenario, and I mentioned that at the beginning of this video. What I want you to take away from this video is that it is still possible, even in today's terms, to be able to retire in 10 years. But you're gonna have to work really hard. The bigger question to ask yourself is if you want to retire in 10 years, it's probably because you don't really like what you're doing right now. So figure out what you like, what your passions are, and over the next 10 years, figure out what you can do for the rest of your life so you can enjoy the fruits of that labor. I'm telling you now, sitting on a beach, sipping on pina coladas may sound great for about 3 weeks, but I'm telling you after that, you get pretty damn bored. I hope you guys have enjoyed this video. If you have, smash that subscribe button. Check out the other whiteboard finance videos I have on this channel, and I'll catch you guys on the next one. Thanks, guys.